Hi, it's James here and welcome to the FXAX channel, your #1 trading resource. As always, we will be providing transparent and informative content without the BS. We know that everyone out there loves the idea of relaxing on the beach while enslaving the robot population to sit at a desk making trades to make you money while you sip on that pina colada. We at FXAX are no different and would love to do the same. We have team members who have dedicated countless hours over the years in search of the holy grail of expert advisors that can run on autopilot to keep churning out profit. So we decided to run a bot for a month and see what kind of results we could get. In this video, I will be going over the bot that we chose and how it performed. Stay tuned until the end of the video for some tips and tricks that we believe you could use to get better results. Before we begin, a disclaimer for you. Forex trading carries a high level of risk to your capital, and you should only trade with money you can afford to lose. Our videos are for educational purposes only and delivered by a team with verified results. So please like, comment, and subscribe if you enjoy the content. As you guys know from our previous videos, which can be found here, there are literally thousands of different trading software bots on the market today. If you haven't already watched these videos in this playlist on how to find and choose the best expert advisors, I would recommend checking those out first. We decided to go with the old, tried and tested Martingale Trading Bot. Now, Martingale trading software is the most widely used and popular type of EA on the market, with literally thousands of them available for free or paid use. This software attracts a lot of traders as it is considered by some to be hands-free, and most importantly, it's beginner-friendly and easy to use. While some traders enjoy the more hands-free approach, there is a more professional technique to use Martingale software that we will cover in the end of this video, for anyone who likes a little more hands-on approach and may want to optimize the software to its full potential. For our purpose, we just downloaded one of the free Martingale bots off the MQL5 marketplace, tossed it on our MT4 platform, which we ran on a VPS to ensure it ran 24 hours a day, 5 days a week, and let it go for just over a month with no intervention, just letting it do its thing. We ran this bot with the recommended settings from the developer, which was letting the software run on the 1 hour chart, on only one pair, which was the euro against the dollar. We chose to run the bot fairly conservative lot size of 0.03 on a $5,000 account. The reason for this is that the Martingale strategy can get into some serious drawdown fast. So it is important to use a small lot size first to give you the best chances of not blowing your account when each following cost averaging trade increases in lot size. Without going into too much detail about how the software works, the Martingale strategy basically works using the theory that you cannot lose every trade all of the time, and thus you should increase the amount allocated to the trade even if you are in negative or drawdown, in anticipation of the market's changing direction. Martingale strategies rely on the theory of mean reversion, essentially doubling the trade size every time a loss is faced, or drawdown levels have hit a certain level. A classic scenario for the strategy is to try and trade an outcome with a 50% probability of it occurring. This is why drawdown levels can increase significantly with this strategy as you are trading against the trend, selling as price is going up and buying while price is going down, anticipating a change in direction. This is the reason why this strategy is considered high risk. If the market doesn't reverse, you may end up like this guy. Ouch. The benefit here though is that because you are increasing your lot size each time, price only has to move a fraction of the distance to cover your drawdown and put you back into profit, closing the basket of trades in an overall net profit. We can see an example of this working beautifully for the first 16 trades here. Each red arrow shows where the software opened a trade, and each green arrow shows where the trade closed in profit. It closed out the first 16 trades in 7 days at just over $60 in profit. Not bad considering I had done nothing. $60 in 7 days, I'll take that. So for the first week, things were looking great. The Martingale bot was churning out money while I slept like a baby, thinking I could be well on my way to earning a cozy little passive side income. Martingale bots work great when markets are consolidating, as there are plenty of opportunities for markets to get the retracement they need and close out the trades in profit. Where this trading strategy really falls apart is when markets start to trend in one direction like this, as there are no retracements deep enough to close the basket of trades in profit, resulting in drawdown increasing further and additional trades opening up the further price moves against your open positions. This is exactly what started happening to us on the 17th trade. As we see price started moving upwards for a sustained period of time with no retracements. So we can see a trade was opened at the arrow and not closed for a long period of time after taking 4 losses in a row. Now, these losses weren't too bad, and no reason to give up hope just yet. As we discussed on this channel numerous times, every trading strategy and trader will take losses. The issue with the Martingale strategy is that losses are often larger than the wins. So unless you can ensure the bot is taking significantly more wins than losses, you may run into this yourselves. In this case, it only took one losing trade of $62 to completely wipe out all the profit bought in by the previous 16 winning trades, with the other 3 losing trades dropping our total account balance. As with any Martingale strategy, the wins are small and the losses can be substantial, with each win being around $5 and the losses ranging from $6 to $62. Another issue we ran into with the trading bot is that it is currently stuck in drawdown, so it is no longer opening trades. Now, the software has not opened a trade in over 2 weeks now, so we are stuck waiting and can't do anything with the software unless price retraces enough to close our trade out in profit, or blows our account, or price can just sit at these levels for as long as it wants, leaving us waiting for weeks, months, or even years for price to move in enough direction to close out or zero it all. Feels a bit more like gambling at this stage. So what can you do to achieve better results if you want to try out a Martingale software? I have a few tips and tricks for you, but want to remind you guys by saying please test this on a demo before running out and using an EA on any live account without testing it first. I do know some people who have managed to run Martingale software quite successfully, though they take a much more hands-on approach. We wanted to see how this bot would work completely hands-free, and so far it is nothing to get too excited about. We are going to keep it running and see how it goes at the 3-month mark. But here are some FXX tips on how you can get the most out of a Martingale software. The first thing would be to keep an eye on any large impact news that will result in the charts looking like this, and make sure you turn your bot off and close any trades well in advance of any news reports. I wouldn't want to be stuck in a trade when this hits and your bot sure as hell wouldn't know how to trade through this, leaving you wishing and praying that price might retrace after the spike. The second thing is diversifying the pairs that you run the software on. We only ran our bot on one chart, and you can see that it hasn't placed a trade in a couple of weeks. I would suggest lowering the initial lot size and running it on more pairs. So if the bot cannot place any more trades on euro dollar, it could still be churning out profits on pound yen. Just be sure to not get too aggressive with the number of charts or lot sizes. Remember, with cost averaging Martingale strategies, the lower the lot size, the better for account preservation, as that drawdown can get high pretty fast and blow your account in the blink of an eye. The last tip is learn how to identify a ranging versus trending market. If you aren't sure how to do this, a cheat here is that you can use a simple indicator tool like the Williams alligator, which is a combination of 3 moving averages. If the lines are all crossing over one another, that is an indication that price is in consolidation, or also referred to as a ranging market, with plenty of opportunities for pullbacks for your software to close out trades in profit. However, as soon as you start noticing the lines spread out like this, that is a good warning sign that a trend has formed and might possibly continue. So you can choose to close out open trades here, turn the software off and take a small loss, but potentially saving yourself from further drawdown with account blowing potential, waiting to turn the software back on once markets are back in consolidation. And that is about it for our Martingale bot progress after 1 month. I would love to hear from any of you guys in the comments below on what your experience with EAs or Martingale software has been like. Any experiences, good or bad? I hope you guys found this video useful and entertaining. Stay tuned as we are currently testing out another couple of EAs that we will be looking to release videos for. And watch for when we update the progress of this Martingale bot at the 3-month mark. Here at FXAct, we are passionate about bringing you all the information, education, and content you need to help each of you reach your trading goals. Thank you so much for watching and stay tuned for our future content. If you have not already done so, feel free to check out our newsletter, Telegram, and Instagram, where we post daily forex analysis. All those links can be found in the description below.